Assalamualaikum and hi, my name is EILYA SYAMIRA binti YUZAINI. My number matric 23DIB19F1012. A market is a collection of pre-planned and executed purchase or sale transaction, as well as the condition under which they are offered and carried out. A market is, in other words, is a continuous economic process. Alright, next is four main market may be distinguished from a standard point of project. First is market for commodities and services. Second, it is real estate. Third is labor. And the last one is money. Currency market of important functions in the economy. The first one is it enables international comparison of pricing for commodities, services, and financial instruments. Second, it helps to the growth of international trade. Next is it enables the movements of purchasing power between a country and other countries. The fourth one is it allows domestic and international financial markets to be linked. And the last one is it enables central banks implement exchange rates and monetary policy.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad ISHAK. My metric number is 23AB19F1004. So today I want to present about the risk management presentation. So mostly about the type of currency risk management. So there are two approaches in the currency risk management. First, conservative approach. Second is active approach. First is conservative approach, mean hedging or protect currency position so that currency exchange fluctuation do not affect changes in cash flow value. Second is action approach. If decide to leave currency exposure partially or completely while waiting the beneficial exchange rate changes, hedging of the position can take the place when decide the exchange rate is profitable for us. Next is currency risk management method and instrument. They are divided by two, internal and external. In internal, they have currency causes, delay in payment, accelerated payment, netting, adjustment, and invoicing in domestic currency. For external instrument, they divide by two, classic and derivative. In classic, they have hedging, discounting note, internal factoring. For derivative, they have forward contract, future contract, currency swap, and currency option. That's all for me. Thank you.
Hi, Assalamualaikum. My name is AMIRAH binti AZLI. My number matric is 23DIB19F1020. Okay, I want to present about the quantitative structure of currency risk management method used by Polish enterprise. Okay, the derivative instrument are trade objects on the stock market and the OTC market. Okay, as seen in this figure, the OTC market turnover is many times more than that of the regulated market, which is 89% for OTC market and only 11% for stock market. Okay, next, the data in the table shows the average daily turnover in the Polish derivatives market broken down into stock and OTC market by year. Okay, in Poland, the OTC market is much larger than the global market. OTC market products are less expensive and better tailored to the demands of buyer. Okay, The Polish derivative market is young and has a low turnover compared to the world major market. The sole purpose to compare it to the world's top derivative market is to determine where the Polish market is located. Okay, what has to be done is to compare the Polish market to those in other nations that have seen similar functioning and growth. Okay, only then would it be feasible to determine in the action carried out in Poland, as well as the creation of derivative proper. The fact that Poland is ahead of nations like Italy, Spain, and Norway in terms of derivative market development as measured by the value of complete transaction. Okay, this table shows a comparison based on study in which Polish, German, and American enterprises were required to label the currency risk hedging instruments they utilize. Okay, forward contract and currency swap are the most popular product in the Polish market. Currency swap have gained popularity as a result of the fact that they are employed by international corporations investing in Poland. Okay, swap are losing favor on the American and German market in favor of OTC traded currency option. Okay, next, the data illustrate that the stock market in the United States has surely expanded the most. The aggregate statistics reflect worldwide pattern, and as a result, the condition of the derivative market.
Assalamualaikum warahmatullahi wabarakatuh. My name is SYAHRIZAL bin NORIZAN. My metric number is 23DIB19F1008. I will continue the title of the next presentation, which is Financial Innovation on the Currency Market. Based on the concept, financial innovation are a natural byproduct of the growth of the financial system. Next, in the financial industry, an innovation is a novel concept for successfully connecting two existing parts to form new combination. Lastly, change in the financial market are reflected in the emergence of new instruments that open subgroup of new markets transaction, which is referred to as wider development. Next, there are 5 groups of financial instruments. Group 1 contain rudimentary financial market goods, which are sometimes referred to as fundamental instruments like share, bond, foreign currency, and indices. Group 2, convertible bonds are a cross between a traditional share and a traditional bond, with the option to convert the bond into a share. Group 3, encompasses traditional derivatives. These are forward and future, options, swaps, and interest rate agreement. Derivatives from derivatives are included. Future and swap are also included in this category of product. Group 5, compound option. Option combination include all option strategy that are tailored to the demand of specific financial market players.
For conclusion, economic openness has been thought to be the driving factor behind innovation and productivity development. Globalization and the process that follow it, which are influenced by international organizations and companies, produce a variety of advantages for some while causing losses or other problems for others. So, a firm must be able to properly manage its resources and adapt it to ever-changing environment. Currency risk is an inevitable part of doing business internationally because financial innovation is so valuable in the currency market. And the last one is develop and refine currency risk management technique.